Boom! At the open, all-time high for the S&P 500.
It's your boy Jimmy. Jimmy.
Now what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil doesn't make up happen.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning, I wanna turn on this Becky quick. While the average man looking at it's sad like she fine as yeah. I'm over here looking at tails and whips like 5'6". I left the mayhem for the market. Now I don't want a dope spot, I want to stop it. I know that booty got dropped, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thumb, grow with the marijuana. Waking up with the future, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call it short squeeze. You get the drop, pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawkish. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance, watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, while I'm still in my same big private. They used to watch me move them packs. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ETF. Hey, my family. Hey, go, what we doing, my man? Him make profit. Hey, Shug, Mike, what we doing? Him make profit. Yo, Wolf, Professor, what we doing? Him make profit.
That TTG money gang, we some snipers.
To the True Trading Group live stream. Hope you're all doing fantastic here today. It is the CPI day. The CPI numbers came out this morning. Boy, were they good. Great numbers across the board, right in line with all of the expectations. Expectations on almost every single metric on the CPI inflation data came out today was right in line with expectations. But those expectations just recently changed. So actually, just a couple of days ago, the expectations for the CPI numbers actually came down. If those changes were never made, you actually would have had all of the inflation numbers from CPI today come in under the expectation. But just a couple of days ago, the expectations were moved down, and all of the numbers came in right dead in line with exactly what the expectations were. What does this mean now for the overall markets, the chance of a soft landing versus the likelihood of a recession? What does it mean now for the stock market crash in the first half of the year versus a recovery in the second half of the year? And you're about to enter the first session of earnings for 2023. All eyes are peeled on the earnings that these companies are going to be announcing. Tomorrow, earnings start with the big banks. Big banks are going to be kicking things off. The markets are closed Monday, so opening back up on Tuesday, you're going to get more earnings from the financials, and you're going to really start to roll into the meat and potatoes of earnings over the next 2 weeks. Why is these next 2 weeks so important for earnings? Because what happens exactly 2 weeks from now? The Fed meeting. So you are going to have the markets be dictated over the next 2 weeks solely on earnings and jobs data. Earnings, jobs data, earnings, jobs data. That is the main focus for the next 2 weeks until you get the Federal Reserve, their announcement on how much they're raising interest rates by, and are they signaling that they're going to be pausing by May. Right now, the expectation is that they're going to give you 3 more rate hikes of 0.25 basis points with a pause in May. The inflation data that you got today was one that was celebrated. The market's been moving to the upside so far. It's a beautiful start to the year of 2023. Is that an omen of what is to come, or is it all a charade? Is the reality still lurking in the back that is about to rear its ugly head very soon? We're going to talk about it. We're going to answer all your questions here today on this live stream. It's a fantastic day for us inside True Trading Group. We keep the red hot start to 2023 alive. We're keeping it alive. Another great trade for us today, guys. Members were able to capitalize on about a 60% gain on an option trade today. I told you yesterday to make sure you guys got yourselves inside of the True Trading Group chat today for the CPI print. And if you didn't come inside a chat, if you didn't join our trial, if you weren't part of the family, you guys missed out on some fantastic trading opportunities here today. And I think that a lot more of that is going to unfold as you get into earnings over the next 2 weeks. We have a lot to talk about, a lot to unpack. I'm going to open things up for a Q&A session. I'll answer all of the questions that you guys have. You got a trader with 17 years of experience that began at a hedge fund in New York City, telling you, ask me anything that's on your mind. I'm happy to do it. So welcome to the live stream, folks. Let's not waste another minute. Who the hell am I? My name is Michael Edward, former award-winning hedge fund trader, now the current head trader and co-founder of True Trading Group. If you don't know by now, TTG is the fastest growing and highest rated premium online educational platform that are available to retail traders and investors today. So if you're ready to learn, trade, and profit for real, you've come to the right place, because 6 nights a week, Sunday through Friday, we go live right here. Myself, other TTG mods, and special guests provide free lessons, education, trade ideas, analysis, and market commentary that can help you become better traders and investors immediately. So take a moment, smash the like button, subscribe to the channel, turn on your notifications, make sure you never miss out on any one of these lives. Why should you care about anything that we discuss? I didn't figure this stuff out on my own. Began my career working at a fund in New York City. My first job out of college. Went through a 3-month educational training program while I worked there. That's how I got my start. Then 2008 happened, and that was the Great Recession. The stock market crashed, but also the same year that I received one of the firm's Trader of the Year awards. Now, fast forward, I'm the co-founder and head trader of TTG, and along with my team of 9 other professional trading moderators and over 20-person staff, we've helped thousands of traders and investors to learn, trade, and profit consistently. See, at TTG, we take university-level curriculum similar to what I learned that I worked at the fund in New York. And we pair that with some of today's top financial stock market and investing tools. We've also excuse me, guys, I'm about to sneeze. We also do workshops and provide mentorship for stocks, options, crypto, and futures. And we cover all styles of trading, day trading, swing trading, but also, yes, we do cover long-term investing as well. You see, we take that university level of curriculum and pair it with today's top tools that are worth about $5,000 a year easy. If you were to go to all these companies, Benzinga, TradingView, Trade Ideas, Quote Media, right? If you were to go to all these companies on your own, their tools are going to cost you around $5,000 a year. We've spent years building relationships with these companies so we can offer their products on our platform without you guys having to pay anything additional for it. It's all included when you join the True Trading Group platform. You'll also get access to over 10,000 of the TTG members, the most successful, helpful, and supportive community of traders and investors that you're going to find. And of course, you'll get all the real-time trade alerts from myself and the other moderators that have been able to maintain a cumulative win rate amongst us as a group of just around 80% now going on the last 3 years. So if you're new to this channel, welcome. Like I said, subscribe, turn on your notifications, make sure you guys never miss out on any of these live streams because we always drop golden nuggets on a regular basis. All right. So let's not waste another minute, guys. To help me go through this Q&A session, I'm going to go ahead and bring on my business partner and co-founder in True Trading Group. Everybody give a big ayo to Adam.
What's up, Michael?
What's up, buddy? How are you?
I'm doing very well. And yourself?
I'm doing great. I like it. We have the dark mode on today, I see.
No. I don't know why that's there.
Oh. All right.
It's a technical difficulty.
Okay. I thought we just switched to dark mode. Oh, here we go.
Are we back?
Yeah, we're back. We're back to gray mode.
We haven't sold annual memberships on the live stream all week, so they cut our lights off.
Yeah, I guess so.
All right. Couple things I want to do to kick this off. I would really love to talk about some of today's trending stocks. Interesting to see what's moving today. First up, let's do Carvana, CVNA. Tell me a little bit.
You're seeing a pretty widespread kind of attack on some of these like really highly shorted stocks recently. And what I really think that you're seeing, I just think that you're seeing on a lot of these names, I just think you're seeing short covering is just taking these stocks higher. These are very highly shorted stocks. These are not necessarily short squeezes because the people that are short these names, the hedge funds, the short positions that are on these stocks are up tremendous amounts of money. These stocks have gotten decimated over the last several months. Like Carvana was $50 in August. It went literally all the way down to $4. Now the stock's at $7. So, yes, it went from 4 to 7. Would you consider that a short squeeze? I mean, I don't think anyone that's short Carvana is really worried about their short position. I just think that you're seeing shorts take their profits off on these stocks as they feel like I think that you had a lot of tax loss selling also come into some of these names that further drove the share price on these stocks down. And now at the start of the new year, I just think you're seeing a lot of that ease. There's no more tax loss selling on the names, and the short positions are now locking in those gains, and they're going to go and put that money to work elsewhere. And you're getting these pops in these very, very, very highly shorted stocks. And as soon as these stocks pop, the retail trader community, the social media communities, they just jump all over these former meme stocks. Carvana is one of them. A big green day today, stocks up 38%. You cracked over a key level of resistance that you had around $6. And you guys can see here, this $6 level was an area of resistance. You look back here from earlier in December, that was a key level of resistance. Another level of resistance that you had was up here around, I would say, 675 or so. And when I draw a line across that 675, you'll notice this blue line on your screen, which is the 50-day moving average. And then you'll notice that you had a support level here, price action wise, and then you have the gap fill. So there's the big gap down, right? So that move back to this price before you had the huge gap down, the move back to that price fills the gap. It's also the 50-day moving average. Well, today, Carvana blew past both of these resistance levels to go up and test your next area of resistance, again, which is just based off of price structure at $8. I call this like $8.50. And you see $8.50, right? $8.50. My warning to people that are long Carvana, or maybe you're long Bed Bath & Beyond, these are short-lived moves. Carvana is not going to go back to $50. It's not going to go back to $40. I would say at the most, if the short squeeze continued, it gets to 12 or 13. And then I would say that that's probably it. If you are bag holding stocks like this, which I know a lot of people are because they got sucked into the diamond hand to the moon kind of mentality and advice from 2022. And if you were diamond handing to the moon Carvana, this stock was $350 in 2021. It's now at $7. It went from $350 to $7. That's pathetic. All right. I'm telling if I was bag holding this name, I would look for, if the short squeeze does continue, and I'll trade the short squeeze. If this gets over 850, you're looking at another round of a short squeeze, because what will end up happening, traders will step in and they will get short in front of these resistance levels. So every time it breaks through it, those shorts cover. So 850 is a mark. If it gets through 850, I'll look to trade it to the long side. If you're bag holding it, I'd look to get out of that position if it gives you another green day.
All right, pull up Best Buy. Best Buy. I keep saying Best Buy. Bed Bath & Beyond.
Yeah, same exact scenario. The company has bankruptcy concerns. The stock has now recently been moving to the upside over the last couple of days because the company is laying people off. They're closing stores in order to cut costs. This company is in serious financial trouble. Their interest payments on their debt is basically what is more than their revenue. So this company is in trouble financially. They're not in a good financial position. Now you're getting, again, a very heavily shorted stock. This stock, let's not forget, was part of the meme craze. In 2021, this was a $30, $40 stock. It went all the way down to $1. It went down to $1 when they announced that they were looking at into bankruptcy protection. The stock went all the way down to $1. Now they announced, we're going to be closing stores. We're looking to cut costs. All you're seeing right now, guys, is a short cover on the positions that are short from earlier in 2022. That's what you're seeing right now. And then, of course, all the retail traders, they jump on. They say, mother of all short squeeze. It further pushes the stock to the upside, but it always comes right back down. And this one will come right back down again. You look at Bed Bath & Beyond back there in August, went all the way up to $30, then all the way back down to $5. Same exact thing happened earlier. Every time the stock gives you a pop, it sells off. Pop, it sells off. Pop, it sells off. Why? Because the company is not in a good financial position. If you are bag holding Bed Bath & Beyond, I would use this short covering rally to get out of the positions and cut your losses when you can. $6 is a big level of resistance, $5.50 to $6. I'm actually going to be considering taking a short on this tomorrow. If the stock can't get over $6, I'll try it actually short in front of $6.
All right, next up, let's pull up Tesla.
I am long Tesla from 108 on Friday. You guys know that if you've been following the live stream for a while. We got long Tesla right there on Friday, around $108. The stock is now at 123. I'll just go back and show you guys on an intraday basis. The entry on this was at 108, which is right there. It was the entry for us. If you guys were live, we went live on Friday while the markets were still open. And I announced everybody that I was swing trading Tesla. I was looking for the stock to get back into the mid to low 120s. And that's exactly where we've gotten to. We've gotten exactly to my target. My target was that 123 to 125 area. We got there, and we've been trading here for the last couple of days. And I'm still long about 11% of my original position size from 108. And I'm going to hold on to it. I'm holding on to this because if Tesla can get through this level, all right, it's like the mid 120s. If Tesla can get through the mid 120s, which is, you see, we've been holding underneath it for the last several days, and you go back further to the left and you can see this previous structure, right? Like you can see the resistance level up there in the mid 120s. If Tesla can get above the mid 120s, the stock has a lot of room, and you can look for a move that can take you all the way back to 136. 136 would be the next level that I would look for. So you've got this level here in the mid, it's like 125 up to 127. You get through that, you're looking at 136. And I'm going to see if I can hang on to this position. Members got into the 110 strike January 20 call option. That's already gone from like $5.70 all the way up to like $17. yesterday. Today, I think it's around $15 or $14.50 still, which is just a huge move. I mean, you're talking triple-digit gains on that trade in just a matter of a couple days. I'm still going to hold on to this. I'm going to hold on to this last 11%. And my stop will be down around maybe 117 or so, 116. Again, I'm long from 108. And I'll see if I can get a little bit more upside.
All right. Very good. All right. You might as well cover the SPY today. Let's talk about the SPY now.
Tricky day in the markets today. You had the better than expected, or well, not better than expected because it came right in line with expectations after the revision. But you had a good CPI number today, and the markets traded slightly higher. But the markets have had a very big move leading into this number. There's been a lot of excitement that the data coming out that the inflation numbers were going to come in low. And last month was 7.1. This month was 6.5. But the big kicker is the fact that your month over month CPI number was actually negative. So prior to the revision, the expectation was that the month over month CPI number was going to be 0. It actually came in though, and then 2 days ago, they lowered the expectation to negative 0.1. So 2 days ago, the expectation was actually 6.7 year over year and 0.0 month over month. 2 days ago, they changed it to 6.5 and negative 0.1. Well, wouldn't you know, the exact numbers today were 6.5 and negative 0.1. That seems fishy as hell to me, that you adjust the expectations just a couple days before the number comes out, and then the numbers come out and it is exactly in line with expectations, almost as if they're like, maybe we should change the expectations because if the numbers come in under expectations, the markets might rally a little too much. So let's change the expectations so that they're not better than expected. They're just what was expected. And it's just psychology. It's like, oh, it was what was expected versus, oh, it's better than expected, even though the numbers don't change. Nonetheless, you got your first month over month negative headline CPI number, which is a very good sign. This is a fantastic CPI number, right? It really is. It's a great number. It shows that inflation is coming down, right? It peaked 6 months ago. It's been coming down ever since. If you actually stay declining at this rate, which I don't think you will, it's easier to go from 9 to 6 than it is to go from 6 to 3. Once you get down to like 4 or 5% on inflation, it's going to be a lot harder to get it from 4 or 5 down to, let's say, 2 or 2.5, which is where the Fed wants to get it to. So it's easier to get it from 9 to 6, harder to get it from 6 to 3. All right. So I don't think it's going to come down at this same rate. However, if this current rate of decrease continues, you're looking at a 3% CPI reading by August. By August, you're at 3% year over year, which is not too far away from the Fed's 2% number that they want to get to. So interesting how the rest of that the inflation numbers are going to be coming out over the next couple of months. But the SPY just bumped its head right up against this 200-day moving average, failed to get above it. Okay, we really failed to get above it. When you take a look at the SPY today, I'll get rid of these fake prints. We double topped right up here. I don't have my pre-market data turned on right now on my charts, but this is also the pre-market high as well. So when the CPI number came out, the market shot up to 398.50, and then we pulled back into the open. And then we bounced back later in the day, double topped at the pre-market high, which was 398.50, and then gave you that little bit of a pullback into the close. And we closed right underneath the 200-day moving average. So I expect there to be some resistance up here on the SPY. You start earnings tomorrow. A lot of your banks are going to be coming out with earnings tomorrow. So depending on what the banks tell you earnings-wise, I think dictates what happens tomorrow in the market. And we're going to have our ears open for what the banks have to say if I think we're going to get through this 200-day moving average. But I would look for a pullback from here. It just depends on if the bank earnings are much better than people expect for tomorrow.
So tomorrow kicks off the 2023 earnings season. We got some. I'm gonna give you a list of companies. You ready to take some notes?
You want me to take notes?
Yeah, I want you to take notes of the companies that are going to be releasing earnings tomorrow, and then you're going to tell me and everyone else which ones are ones we should be paying attention to.
Oh yeah, okay, good. Yeah.
J.P. Morgan Chase.
Yeah.
Bank of America.
Yep.
Citigroup.
Yep.
Delta Airlines. United Health. Wells Fargo. BlackRock. Bank of New York Mellon. First Republic Bank. YPro Limited. GLGI Greystone Logistics Inc. Shift Pixie, which was coincidentally my name in college. Solitron Devices Inc. SODI.
The only ones you really need to focus on are J.P. Morgan, Bank of America. The biggest ones I would focus on are J.P. Morgan, Bank of America, Wells Fargo are the biggest ones to focus on.
Those all come out before the bell. So J.P. Morgan Chase is coming out at 6:50 a.m. Bank of America is coming out at 6:45. Citigroup 8 a.m. Delta Airlines will be on time at 6:30 a.m. tomorrow morning. It depends if there's any other issues. Jessica laughed at that one.
So the reason why I'm disregards for like First Republic Bank and Bank of New York and some of the other and the other companies you named, they're much smaller companies, and those are smaller banks. The ones that I just mentioned, you really want to pay attention to the banks that have the largest consumer presence, which is going to be Wells Fargo, Bank of America, and J.P. Morgan will have the largest consumer banking departments. Like Goldman Sachs is not a consumer bank. Right, you don't walk into a Goldman Sachs branch and open up a checking account. So you really going to pay attention to what the banks are going to have to say.
Do they not have a Super Saver account?
So you're going to want to be listening to what they have to say about the state of the consumer. You're going to get information about that. Obviously, we know that the consumer have been dipping into their savings, that record savings that happened during COVID. That's been running out. You're going to hear about credit. You're going to hear about, how much consumer credit, if it's a problem. You're going to get statements from Jamie Dimon. Jamie Dimon's a very influential person. What the markets do react to things that he says. The markets have reacted to things that JP Morgan, that Jamie Dimon has said in the past. So I think his words will carry pretty heavy weight tomorrow, as well as the earnings and the consumer data you get from JP Morgan, Bank of America, and Wells Fargo. So those are going to be the most important ones, and they'll set the tone for tomorrow. Delta Airlines is not as important, I don't think, because you've already had a massive move in the airlines. And American Airlines came out today and basically said, hey, guys, American Airlines came out and said travel demand is through the roof. We are not seeing any slowdown. And American Airlines actually raised their guidance. Everyone's talking about the slowdown that's coming in 2023 and companies reducing guidance. American Airlines raised their guidance. All right. And you can see the big move that a lot of these airlines, I mean, look at this. Look at United Airlines. This stock is absolutely on fire. I've never seen airline stocks move like this.
Yo, you can't say fire on a plane, dude.
I know. Can't say bomb. Well, this is, one of the I don't ever think I've ever seen American Airlines move like this before. I mean, this is such an unbelievable. This is not a volatile stock. This stock was $37 a week and a half ago. It's at 51. It's a huge move for these companies. Now, tomorrow you're going to get Delta Airlines. But look at the move Delta Airlines has already done. So, like the risk, in my opinion, is if Delta Airlines comes out and says, actually, we're seeing a slowdown. Well, then all of a sudden, if Delta Airlines, the risk, in my opinion, to the airlines right now is to the downside because they've already had a huge rally. American Airlines already told you demand is through the roof. So what's going to happen tomorrow? Delta Airlines says, yeah, demand is strong. It just reiterates exactly what American Airlines said. The stock was up 4% today on the back of what American Airlines said. So the risk here is actually to the downside that Delta Airlines does not have as strong of a stance as American Airlines. And that would cause the entire sector of airlines to pull back as you get profit taking kicks in. Okay. And then United Health is, the biggest United Health, one of the biggest healthcare companies that's listed on the market. They're just a fantastic company. One of the healthcare stocks that I own, I've owned United Health for a while, and you have this resistance level here at 550 that is just an absolute monster. This 550 is an absolute monster. You see what happens with earnings tomorrow. If there are pullbacks, if you get a pullback in United Health, support zones on United Health that look good in my opinion, are 425 to 450. This is going to be a decent little support zone for United Health, 425 to 450. So if you do get a trade down on earnings, that's a good looking support zone. Otherwise, if you get through this flat top all-time high, then you're talking about a move up into the sixes. A lot of different analysts have price targets for United Health that are over 600.
Very good. All right. What I'd like for you guys to do now is I'd like for you guys to type your questions in chat. All right. Also, hang on. So go ahead, type your questions in the chat.
Who also is on the live stream right now that's not a member or a trial member? If you're not a member or a trial member, just type TTG in chat real quick, guys.
Yep.
Just type TTG if you're not a member or you're not a trial member either. Type TTG in chat real quick. All right, we've got Gold Miner, Jonathan Wilson, Doug, Dr. Strider, Fuma, FS, Panu, Noah, Anonymous, Protocol, Mason, Anar Gyros. What do you think of TLT going forward? I like TLT. I think bonds are going to have a much better year this year than they did last year. Percussion, Kurt.
Oh no, wait, Percussion TV? Is that real?
Adam, focus, man.
I am. Hang on.
Just making sure. You seem distracted there for a second.
All right.
You got Terry.
No, not the same drummer I thought it was. All right. Very good. Hang on, let me see this now.
If you are a trial member, actually, guys, why don't you type trial in chat right now? If you are a trial member, type trial in chat. Type trial if you are a trial member. Yeah, guys, I'll answer a bunch of your questions here. And I see a bunch of people are typing some pretty good questions in chat. I'll get to your questions in just a minute. Just want to see the audience that we have with us here today before I roll into. Way to go, Craig. Congratulations. Craig says today was his best day of the year. Way to go, Craig. Was it on end phase? Did you hit end phase with me today? About a 60, 70% gain on the end phase trade today. Now we got Fawaz, so one of you. Hey guys, we're gonna hit your questions in just a moment. So what are we doing here?
I'm thinking. We've been having a lot of fun with the trials. We've gotten a lot of trial members that have signed up. A lot of them have benefited from this. And I kind of don't want to yeah, I want to sell the membership on these streams. We do that all the time. We haven't done it this week. I really do like the vibe of I really like the vibe of what's going on this week without having to do the sales.
Mm-hmm. Yeah, listen, I've really enjoyed doing the Q&A sessions.
Yeah.
Like
Have you
really
guys
letting-
enjoyed? I mean, for those that have been on the live stream before and often, have you guys enjoyed the way that we've done the stream this week? I mean, it's been really great.
I think it's good to do the Q&As like that. People get to ask, the questions that they have instead of, maybe instead of the things that I'm talking about. If they've got specific and particular questions, I think it's good for people to be able to ask me whatever's on their mind. And I'm more than happy to share, my experience and my, my education, everything with them. So.
Yeah, you know what? I kind of want to keep it going. And I kind of want to keep it going. So here's what here's what we've been doing for the past and I'll make this quick. So for the past couple of days, Monday to really till today, right? What's happened is that we've been making some big updates to our annual membership, right? So for us, that's been very tedious, time consuming. And so we have not been able to sell that membership on this live stream. Normally we sell our membership on this live stream all the time. What we've been doing is we have been pushing our trial membership all week, right? All week. And we have been giving people a chance to sign up for the trial, and then the following day at around 10:30 in the morning, we've been giving away a free membership to one of the people that signed up for the trial. And for all those that for the ones that don't get the free membership, we've been offering them a very steep discount on what a membership is. And anyone that takes that discount, we're actually adding them to a list, and at the end of the month, they're going to be in the running for $1,000. Okay, so I've had a lot of fun with it this week. Have you guys liked that model this week? It's been way less infomercially. We've been able to get a lot of really great content out, and I think that I think people have really enjoyed it.
Yeah, I think it's been good. I think people have really enjoyed it.
So yeah, you know what? I kind of want to keep that going. What do you guys think? You want to keep that going one more night, and then we'll bring back the sales over the weekend? Yeah? Type yes or no. Type yes or no. I can do the trial thing one more night, and then Friday we can go ahead and we can go back to sales on the live stream like normal. I think a lot of people want to do it one more night.
Yeah, listen, I enjoy doing it. I love to do it. So, yeah, I got a question here also, Adam. I'll just hit while everyone's responding. I got a question here from Anonymous. Says, what's the membership gain for you? For instance, can I get buy-sell signals on a ticker that I'm entering? So, Anonymous, and anybody else that's new to this channel, I just saw that there was a bunch of people that are new. Basically, just so you understand what True Trading Group is, we're a platform where you are going to gain access to myself, and there's 9 other professional traders that are with you during the day. We all share our screen with you, so you see what we are looking at on our trading stations. And then we also talk to you on the microphone throughout every single trading session. Now, when we're entering and exiting trades, we always come on the mic and tell you what we're going to do before we actually do it. So you'll know what we're going to be buying, what we're going to be selling. You guys know, where my prices are, where my take profits are, where I'm buying. You guys will know all of those things ahead of time. So you're not going to be chasing alerts. And then there are push notifications that get sent out whenever the moderator's orders actually execute. So you'll know when our orders are actually filled. You get the real-time notification when our orders fill. And we do everything. We day trade, we swing trade, we trade stock, we trade options. We do it all inside of True Trading Group. And of course, you also get access to all the courses, which is a simplified and expanded upon version of what I learned that I worked at the fund in New York. And then our other moderators have added to all that curriculum as well. And then you also get a bunch of trading tools like You get Benzinga's news feed, trading views charts, the trade ideas scanner, quote media's level 2, dark pool data, analyst rating, short data, insider buying, insider selling, a social sentiment scanner, a trading journal. All of that stuff is included with your membership when you join TTG. You don't pay extra for it. The tools and the courses are all included. So that's the TTG platform. So anyone that doesn't know what True Trading Group is, that is TTG in a nutshell. All right. But what we'll do here now today on this live stream is not, we're not trying to sell the membership here on the live stream. If you guys want to join our trial, you certainly, it's a 7-day trial. The weekends and holidays do not count against your 7 days, which is important. So Saturday, Sunday, and then Martin Luther King Day does not count against your 7-day trial. You get 7 trading days with us. If you want to come hang out, trade with us, it's been a banger start to the year. We've been red hot to start the year. Another 60-70% gain today for members on an option trade today on ENPH was actually where I hit my money today. That's a stock that I was in today, ENPH. That's where I was able to capitalize. But join our trial. It's $3. It's a one-time payment. There's no automatic renewal. There's no recurring payment. It's a one-time payment of $3. You just go to TTG3 spelled out. So TTGTHREE.com. That's TTG3.com. There's no automatic upgrade. There's no automatic renewal. There's no reoccurring payment. None of that. We don't play those games. It's a one-time payment of $3. Everyone has $3. We do that just to make sure you're a real person, so you don't come in our chat and start spamming everything. And we maintain the integrity and the high quality of our chat room. That's how we do that. Make sure you guys are real people. And you get to trade with us for 7 days. And then tomorrow, anyone that joins the trial here today, tomorrow at around 10:30, we'll do a giveaway for a free membership for the year. So anyone that joins the trial tonight, you'll have a chance at a free membership tomorrow. So again, go to TTG3.com and you guys can check out the platform for a full 7 trading days. And you guys, good luck. You'll have a chance at winning a free membership tomorrow. I mean, it's the perfect time. I'm sorry, it's the perfect time because you're about to start earnings. And these next couple of days are going to be very important to set the tone for the market because you don't have a Fed meeting until February 1st. So earnings and analyzing earnings and whether are these earnings holding up? Are the earnings starting to crack? Is going to be very, very, very important to dictate the direction this market goes over the next 2 weeks. So if you guys have ever been interested in joining the platform or if you don't want to trade through this on your own, go to TTG3.com right now and sign up for that trial.
Yep. When you get to the trial page, what you're going to want to do is enter your name and then your email. Then you're going to click, yes, I want this. Again, that URL is TTGTHREE.com. That's TTG3.com. You'll select all the traffic lights or whatever pops up there to confirm. Then you're going to be taken to an application page. This application exists so that we can pre-screen whoever wants to come in. We understand that everybody has $3. We get that, but we want to make sure that you're coming into True Trading Group for the right reasons. We want to make sure that that we're a good fit for you, right? So you'll fill out the application. Most of you will be approved. If you're not approved, maybe think about some of your answers and what you put. Maybe try again the next day, okay? Then you'll get to the checkout page. The checkout page will say, congratulations, you've been approved. Go ahead, enter your name, email, phone number, and then your payment info for the $3. It's also going to prompt you to create a username and password for the account. And then you'll immediately be redirected to your member dashboard. Okay? The $3 that is being charged, just like Mike said, is a one-time non-renewing payment, meaning after a full 7 trading days, and again, weekends and holidays, including this weekend and Martin Luther King Day on Monday, do not count. That means that you will get a full 7 trading days. So tomorrow is your first day, and then 7 more trading days after that, right? Once you sign up, you'll be able to access our chat room. Our chat room is open starting from 8:20 a.m. Eastern, closes at 4 p.m. Eastern every day. All right. We have a mobile app, so as long as you are able to listen to music at work, you'll be able to listen to the analysis and participate during the day. Download that mobile app immediately. Okay, what I want you to do is after you sign up for the trial, go to your dashboard, and then there's a tab that will say mobile app. Click that tab. There's a 1 minute and 27-second video. Watch that video. That video will definitely explain in great detail how to download and connect your app so that you can receive the push notifications and then you can stay connected all day with us. All you need is a set of headphones. Okay. Now, the $3 is a one-time $3 charge. At the end of your 7-day trial, 7 trading day trial, you are never charged again. You don't need to cancel it. It just expires. All right. So the $3 charge and that application is how we pre-screen our trial members to make sure that they're right for us and we're right for you. TTG is not the only thing out there. And our members, and it's very important to us to protect. Oh my gosh. Richard Boudet made $48,000 today.
Where'd it go, Richard?
Richard, that is absolutely amazing. And I will gladly. Hang on 1 second.
What did you trade, Richard?
Richard, do me a favor, buddy. Send a text message to 786-505-4221. That's 786-505-4221. 786-505-4221 with some sort of proof. Normally when somebody says they made $48,000 in a day or, something along those lines, I think it's amazing. That's absolutely fantastic. However, we got to see the proof. It's a big claim. So before we get all hype and celebrate it, we believe, I by default believe you, but please go ahead and send me some proof.
Oh, excuse me.
All right. And then, yeah. All right, cool. So, yep, we trust, but we also want to verify. It's very important that we remain transparent.
Yeah, nice. Okay, terrific. Oh, yes, I'm sorry, Adam. I thought you were done. But yeah, guys, to Adam's point, 100%. We're fully transparent here and we're open here, and we always want to just make sure that we back up and verify, any gains and any type of performance that people do claim. That's very, very important to us. Also, I want to give a shout out. Okay, terrific says I crushed Glenny's Frey trade, and shout out to Glenny, one of our TTG mods. Excellent swing trade today on FREY. Stock is up 8.5% today from the entry yesterday. So shout out there. Okay, terrific. Yes, a beautiful move there today on FREY. So shout out there. Someone said I crushed Glenny's FREY trade. Congrats on that one. Nicely done, Glenny, and congrats to those that followed along.
Yep. All right. So no, I am not. Okay. So anyways, that's pretty much it. So tomorrow what we'll do between 10 and 10:30 in the morning, just like we did today, I will give out another free membership to True Trading Group, and I will extend that offer that I made to trial members today for one more day till tomorrow morning. Okay. And that'll be it. And then tomorrow at 3:00, we go live on this channel and we'll start back up and we'll just sell like we normally do. Okay. So the price will be $13.50 tomorrow, starting at 3:00 for the weekend. All right.
Cool.
All right. Go to ttgthree.com. Sign up. You don't have to do it right now. There's no FOMO for a trial sign up. Just go there, sign up, and we'll see you in chat tomorrow morning. Should be a great day. Start of earnings. All right. Very cool. So, all right, let's answer some more questions here. Go back a bit. Mike, talk about your ENPH trade today.
Yeah, ENPH today. That was where I caught this early morning short. I caught this big move to the downside off the early session. It was off of this resistance level at 243.50. So let me just draw the line at that resistance level first. Okay. And then I'll pan this out, and you guys can see as I pan this out, the significance of this level. Okay. So you'll notice yesterday, right? You see the resistance there yesterday. You'll also notice the resistance there from the 9th. And then you'll notice the resistance there on the 5th. And prior to the breakdown through it, it was support. So there's a support. You cracked it. It became resistance, was resistance. Today, right off the open, you gapped up with the CPI number. And we were kind of looking at this in the morning. I was very honest with people today with that CPI number that I was like, I wasn't overly confident. I didn't have very high conviction today on what the market was going to do because the market had rallied into this key resistance level. You got the inflation data. It's great. It's great data, but because of the expectations being adjusted 2 days ago, now it's in line with expectations instead of better than expectations. And I was like, this could be a buy the rumor, sell the news type of trade. So I was like, I'm not really confident in how I want to go about, going after this. So when I saw ENPH at this 243 level, and the stock just ran away from that resistance. So again, there's the high of the day today, right? You see the high of the day today, and the stock just craters, instantly goes red. Now the market and everything else was nowhere near red on the day yet at this point. I mean, you look at the first two candles of the day. Okay, you look at the first two candles of the day, you see the SPY drops down into the red. Okay, see everything else dropping down into the red. Apple dropping down into the red. Alphabet dropping down into the red. So as I'm sitting there and I'm saying, okay, ENPH just drops down, goes red. Okay. Oh, we welcome Rodrigo. Rodrigo, welcome to the trial membership. Everybody welcome Rodrigo. Go to TTG.com. That's TTG3.com. You guys want to join our trial? Welcome Rodrigo to the trial membership. All right, but back to ENPH real quick. So right away, you see us touch that resistance and then drop. I'm not in the position yet. I'm not in the trade yet. We dropped right down through yesterday's close. Okay. Now, that just to me, again, just solidifies the resistance level that we've seen here at this 243, 243.50. And I thought that we had more downside. I was okay. I'll play off that resistance level. I waited for the first green candle bounce that I got, and I just got short right into it. And right here was my entry. Okay. Right at 238. So right there's the entry. I waited for the first little bounce back, took my short, and then you see the stock just continue to the downside. These are 3-minute candles, by the way, folks. These are not 1-minute candles. These are 3-minute candles. Okay. These are 3-minute candles. So I waited for the little bounce, and I came on the mic and I told everybody, just like I always do. Now this was a fast moving stock, but I came on the mic and I told everybody, guys, ENPH is running away from that 243 resistance. Watch for the bounce back towards 238 because 238 would have taken you back into trade line, back into VWAP. And I said, okay, I'm going to step in here. I'm going to give this thing a shot at trade line VWAP 38.2 fib, which was right around 238. Okay. So I took my short up there at 238. Members got into, what was it, guys? The 237. I think it was the 237.120 strike put. And it was around $3.50. And the option went all the way to $6. So there was the entry. And then you can see the stock just rolled out of bed as the market sold off here for the first, hour of the day. And we were able to capitalize and just start ripping profits off the table on the trade. I held on to a small piece of the position in case I got follow through. And then once this thing reclaimed back above VWAP, I took the last piece of my position off the table here. And that was my trade. So there was the entry. And then we took about 75% of my position off the table down in this range. And then I took the final 25% basically at break even from that initial entry for the last piece. But the 75% of the position off for a beautiful trade there to the downside into the low 230s. And that was the ENPH trade. And a bunch of members were able to capitalize on that with me as well. So congratulations on that one, guys. Yeah, congrats everybody that hit the ENPH one. That was a nice trade for us today. That's where I made my money today. Simple. It was a simple one. Thank you, guys. Yes, thank you, thank you, thank you. Continue to ask your questions, guys, or any questions that you guys have. Now's the time to fire away and to ask them. So you guys fire away, you guys, and then Adam, I'll let you guys, you see a question, you throw it up on the screen, and it'll be my pleasure to answer it. Justin says, question, guys, is there any chance the market halfway priced in bad earnings guidance? You were talking about June puts, and I'm curious if a play like that is still possible. So Justin, the market, so earnings estimates have come down. They have come down from last year, but earnings estimates right now are not pricing any type of a recession. So right now, the earnings estimates would be for a slowdown, but not for any type of recession. So to say that the bad earnings guidance is priced in, I would say is not true. That's why this earnings season is going to be so important to see, do earnings hold up and does the guidance hold up? Do earnings hold up and does the guidance hold up? And you ask about the June puts. Is that trade still possible? Yes, that trade is definitely still possible. But I talked about this in actually we issued a 2023 stock market outlook report for 2023. And in that report, I specifically made mention to the fact that every single analyst and fund manager and everybody that I hear talk about what they think about 2023, all of them were saying crash first half, bounce second half. And I'm like, I don't like it when everybody thinks the same thing. And coming into the end of 2022, I said this. That's what I said. I told that to me. You can watch my live streams. I said that back in the middle of December, that I was like, I think the market's crashed in the first half and then bounce back in the second half. And then as the year went on, as December went on, and you got into like the end of the year wrap up, and like people on CNBC were giving their thoughts on 2023, every single person was like, yeah, down first half, down second half. I'm like, oh, now you might think that you're like, oh, that's a good thing. All the professionals agree with you. No, like it's not a good thing when everybody thinks the same. When everybody thinks the same thing's going to happen, it very rarely ever does. And now I'm sitting here as you get into the end of the year. We got to welcome Laxman. Laxman, welcome to the trial membership. Everybody welcome Laxman. Guys, again, go to ttg3.com. Join the trial. You get 7 days with us for $3, and you'll have a chance at a free membership tomorrow. So go to ttg3.com. So as the data starts to come out and you got the jobs numbers from at the end of the year, right? Those job numbers that you just recently got. I'm like, oh boy. I'm like, the unemployment number went from 3.7 down to 3.5. And I'm like, yeah, it's seasonal. Yeah, that number is going to soften up, but it's still really, really, really strong. And I'm like, I could definitely see a scenario where everyone knows inflation peaked. And this is what I talked about in my 2023 report. And I said, I am beginning to more and more think about inflation continues to come down. The Fed pauses rates in either March or the May meeting. The jobs market and earnings actually hold up better than people expected, and the market will rally in the first half of the year on the thoughts that you may have a soft landing. Because the longer that earnings hold up and the longer that the labor market holds up, the more possible a soft landing becomes, because inflation is going to continue to come down. So as long as inflation continues to come down, which it has been for the last 6 months and will continue to, the longer that holds, chance of soft landing increases. But then as you get into the second half of the year, now all of a sudden the earnings start to slow down. Now that rate hikes that the Fed has done have filtered through the economy enough to slow the economy to a point where now all of a sudden companies do start missing earnings and they do start guiding lower for the end of 2023. Then the recession shows up towards the end of the year, and everybody that chased the market to the upside in the first half, because they're like, oh my God, we're going to avoid a recession. And all these funds that are caught off sides that are positioned for a down move, they're going to chase the market higher. And then the rug gets pulled out from underneath. And you can see the exact opposite of what people are talking about. I talked about it in my 2023 report, and it's something that I'm thinking more and more and more about.
Great. You there?
Yep.
Okay. Mike, I want to do something real quick. Hang on a second. I have a member on the phone right now. He wants to remain anonymous, so I am going to respect that. I am going to say what he is saying, okay?
Okay.
And you'll understand why in a second. No, we don't have to do that. Joe, take off the banner that's right there, please. All right, so this member started purchasing, and correct me if I'm wrong, okay? Started purchasing United Airlines probably about a year ago.
I know what this is. Go ahead. I know this is.
They've been with your trading group for since December 28th. You could clearly see what they are up. They are up over $400,000 on the position. And this person is essentially asking, what do you think that they should do? Because they want to hold it to like $50.
It's already it's at 52.
I'm sorry, 57.
They want to hold it to 57. I would say that 57 has no relevance. So I don't know where the 57 number kind of comes from. United Airlines is my favorite airline. It's the airline that I own. Okay. So I own American Airlines. I bought it way back in 2020. And the stock, it bounced off those 2020 lows. But if you didn't catch kind of the lows, the stock's just been trading sideways for the last 2 years. And just recently gave you a nice sizable uptick as you're taking a look and you're looking at the airlines as demand just being insanely strong, and travel demand being insanely strong. You're up a lot of money, man. You're up a lot of money. I would, if it was me, listen, you do whatever, it's your money. You do whatever you want. It's your position. It's your money. If it was me, and I was up $400,000 on this one position, and the stock just went from 37 to 52 in a matter of a week and a half, I'd be selling some. I'd be taking some profit off of the table. I'd lock in that gain so that, the remainder of my position is it's free. It's house money, because I don't see a scenario where United Airlines goes back to, let's say, $80. And if your target is only 57, it's at 51.5. Now, imagine the horror if the stock goes to 53, never gets to 57, you don't sell anything, and it goes back to 35. Imagine the horror that you're going to feel. I would say there is such a massive level of resistance at $60, which is, I'll just draw a line for you guys across this level, and I'll go out to a weekly chart so you can see it a little bit more clearly. This is a weekly chart. So there's your previous support. As you go back to 2015 and 2016, there's resistance. There's support in 2017. You blew through it during COVID. You rallied back, and it became resistance again in 2021. And now here you are kind of moving your way up to the 200-day moving average on the weekly chart. And why is that significant? Because look at the 200-day moving average on the weekly chart. Look how significant this price point is. Look at this yellow line. Every time that the stock has gone to this yellow line acted as a level of support for the last decade. Now you got up to that level in 2021 as resistance for the first time. The last decade, it was support. It became resistance here in 2021. Now you're about to test that level again. I think that, the airlines are rallying because travel demand is still very, very high. But eventually, I feel that the consumer-driven, the leisure travel is gonna cool as the economy slows and more people get their finally COVID is over vacations out of the way. People are playing catch up on their vacations. Travel demand is still through the roof. But as the economy slows, as a recession appears, as people get their COVID is finally over vacations out of the way, that leisure travel will start to subside. And the business travel is not coming back to where it was before COVID. Business travel is where airlines make the best margins. That's where they make a lot of their money. And business travel is still down. And I don't expect business travel to get back to where it was pre-COVID, because now what used to be a 3-day trip to London or a 2-day trip to London is now become a Zoom call. And I don't know if you're going to see that business travel really come back. So I don't think you see these airlines get back to pre-COVID levels. So if it was me, I'd be taking profit into this move. If you want to hold some for the long term, then go right ahead. But if it was me, I would hold it with house money.
He says thank you, and he deeply regrets that we no longer sell a lifetime membership. Joking, he didn't say that last part.
I'm not going to. I know who it is because I've seen them ask me the question before.
You got to pay for that.
Just tell him congrats, man. Congrats. Honestly, I'm really happy.
Yeah, but honestly, yeah. I don't know if you can hear him, but he's saying,
I can't hear him.
Not you. I'm talking to the person. Mike is saying congrats, but I look, man. I agree with you. If I'm up $400,000, I'm taking some of that money. Okay, sounds good. Thanks. Bye. What a cool idea. Maybe we should set up a number and let people call in to ask their questions.
Yeah, that's cool.
That would be super neat.
Yeah, like how they do, like how Jim Cramer does.
Oh, I don't watch Jim Cramer because I'm not a boomer.
Yeah, Jim Cramer has his Mad Money show. People call in and ask him questions about stocks.
Let me see. How many people are not a member that would want us to do that? It's fine. It's late. We've had a banner week. I really don't really want to be here anyway. Hang on. I do owe some people a shout out. So give me a second. We had a bunch of people sign up today.
You're talking about just now for the trial, or are we talking about?
No. We had a bunch of new annual members sign up today that were trials that took us up on that offer, and I promised them a shout out.
Cool. Are you doing that now, or?
I'm trying to find where I had it last night.
Well, guys, go ahead while we wait for Adam to get those names together. You guys can go ahead and start typing your questions in chat, and we'll throw them up on the screen. I'll be happy to take a bunch more.
All right.
So yeah, Joe, or thoughts on Lucid? Oh man, the stock has been decimated, guys. I mean, I don't believe the Saudis would let Lucid fail. The biggest problem with these EV companies is the cost of capital and how cash intensive it is to run and build and develop an electric vehicle company. Tesla, best in breed, almost went bankrupt twice. And they had a billionaire as their CEO. A lot of these other EV companies that don't have strong financial backings are going to have a very difficult time in a high interest rate environment because they need capital. They need capital. They're either going to have to dilute their shares, or they're going to get themselves into a situation where they can't afford, their debt. It's just, but I don't think that happens with Lucid, because they have the Saudis that is backing them. The Saudis actually just increased their stake and increased their investment just within the last couple months. I forgot exactly when that news was, but it was just recently. It was just within the last couple of months. So, they're going all in on Lucid, and I don't think that they'll let it fail. But with that being said, I don't really expect these EV companies to have good years. The only way I think that they have years is if you avoid a recession, because as a recession becomes less likely and as a soft landing becomes more likely, all of your consumer discretionary stocks, all of your tech stocks, all your growth stocks, they will all rally. Once you get to a point where, wait a second, now soft landing becomes less possible and recession becomes more possible, then all of a sudden the exact opposite happens, and the consumer discretionaries and the growth stocks and the tech stocks, they all start to move themselves back to the downside, as investors then very quickly shift and flock back to safety, which would be like consumer staples, healthcare, defense stocks, utilities, right? These are going to be all of your some REITs. Like, these will be your defensive areas, and you'll see investors very quickly shift away from them back into the others, and these stocks can go down just as quickly as they went back up. So I think there's a lot of resistance on Lucid, once you start getting over $10. So if you're buying Lucid now, it's because you plan on holding this stock for the next 20 years type of thing, not because you think it's going to have a good 3 months. If you're that's the reason why you're in, I think it's for the wrong reason.
All right, and we need to welcome Tony, Wilfred, Audra, Kimberly, LeBrian, Lonnie, Sharang, Evangela, Sam, Ravi, Alexander, Gerardo, Billy, Phil, Gabriel, and Craig. Guys, welcome to the True Trading Group family. These are your new annual members from today. These are the trials that converted and that have decided to join True Trading Group. So welcome, welcome, welcome.
Awesome.
And
welcome, everybody. That's a lot of new fam. A lot of new family members.
A lot of new fam today. Welcome. So, welcome, guys. And then we also need to welcome Michael C. Michael C.
To the trial, or?
To the trial. Yeah.
Michael C., welcome to the trial. Guys, don't forget, anyone that joins a trial today, you'll get the 7 trading days with us, but you also have a shot at a free membership tomorrow. Go to ttgthree.com. That's ttg3.com to join our trial. Give yourself a shot at a free membership tomorrow.
Yeah. Mike, I got nothing else.
Yeah, I'll take a couple more questions if you guys want to do, let people kind of fire their questions. I'll take a couple of more questions. It's been a long week, man. It's been a long week. Tomorrow we'll be live at 3:00. I'll trade with you guys live tomorrow on YouTube for the final hour of the day and the final hour of the week. We'll see if I'm still long Tesla or not. And we'll break down the bank earnings, and we'll break down the bank earnings tomorrow to see, what does this mean? Is this a sign that the earnings are holding up, or what do they have to say about the consumer? Does it damper kind of the excitement in the markets right now about CPI, or does that 200-day become resistance? I'll tell you guys now what I'm looking for tomorrow. I'll kind of go over with you kind of a trade idea that I have today is.
All right. Well, I'm gonna dip out a little bit early. I gotta get home to the kids. Sarah is at school this evening. My wife is getting her master's degree, and I could not be more proud, and hopefully she can be our Wendy Rhodes one day.
That'd be dope.
So I've already planted the seed. She can be a good listener at times. I'm gonna stop, but anyways, listen, guys. For those that are not yet a trial member, ttgthree.com. I'm going to give you an opportunity to get a free membership tomorrow. For those that don't get the free membership, I'm going to give you a stupid discount. For those that sign up on that stupid discount, at the end of the month, you're going to have a chance to win $1,000. All right?
You're a stupid discount.
Your stupid discount.
All right. I'm going to, all right, dip out. I'm going to finish up. I'll take a couple more questions from people. I want to talk about a trade idea that I have for tomorrow too regarding the SPY. So one of the things I'm looking at, guys, for tomorrow with the SPY is really playing this off of the 200-day moving average. And the 200-day moving average held as resistance today. And what I'm actually looking for is now this could all change based on the bank earnings tomorrow. Okay, so now members of True Trading Group, you guys will obviously know pre-market if this idea has changed, because we're live with you guys pre-market, obviously going over the watch list, the game plan, and what I'm going to be doing, what stocks I'm attacking, and what I think the market's going to do for the day. So the bank earnings come out before 7 a.m. So we're going to know what the bank earnings are what they all are, and if they're going to set the tone for the day. What I'm initially thinking for tomorrow is I'm looking for us to get above today's high briefly, and then give you like a quick pullback underneath it. And then I'm going to try to take that short and look for a pullback into the close tomorrow. So it's like maybe a little gap up tomorrow, trade through yesterday's high, get everybody excited in the first hour of the day, and then run out of steam and then sell back off beneath the 200-day, beneath today's high, and then continue that pullback going into the close. That's what I'm thinking about coming into the day tomorrow. But again, that thought process could change based on what the bank earnings are tomorrow morning. But that is a trade idea that I have lined up and teed up for tomorrow. Members of TTG, obviously pre-market, will decide. I'll tell you if that is a trade that we're going to actually execute, or if that analysis has changed for whatever the reason. All right. So if you guys have any questions, go ahead, fire away. Ask me questions, whatever's on your guys' mind. I'll take maybe one or two more questions before we break for the night. And as we see the question, Joe, as you see a good question, you can just throw it up on the screen. So go ahead, guys, just type your questions right in chat. SPY to 380 by February possible? Yeah, for sure. It's definitely possible. That's, we were just at 380 5 days ago. We were at 380 5 days ago. So yeah, absolutely. You could absolutely head back to 380 by February. Don't forget, the Fed meeting is February 1st. So the Fed meeting alone could take you back to 380, depending on what Jerome Powell says. So it's certainly possible. You're talking about a 20-point move in a month? Absolutely. Netflix is knocking on that 332.50-ish level. October, December looks like a wedge, which rejected, but 2023 now is a steeper channel. Any ideas or avoid for now? It's a good question. Let me pull it up and see if I see the same setup that you're talking about. October through December looks like a wedge. October. Oh, like an ascending wedge? I assume is what you were talking about, this ascending wedge for Netflix. I assume that's what you're referring to. Rejected, but 2023 now is a steeper channel. So now I guess you're looking at this as a channel this way. This is your analysis. It's your analysis. I'm just going off what you're saying, not necessarily what I'm saying. So this kind of looks like, I guess, the analysis that you're talking about, right? Avoid for now. The steep channel, you're saying avoid for now, or do I think that this thing has more room? This is a big level of resistance for Netflix. I think that, I think that Netflix actually will continue higher. I think you can see Netflix back at 400, but not before. I think we maybe have a little bit of a pullback off of this 330 area. And this 330 level that you speak of about why is that level such a big level of resistance? If you guys look at all the way back here, you go back to March, and then you go back to April of 2022. This is before Netflix had that disaster earnings, right? So Netflix had 2 back-to-back horrific earnings reports. One was there in January, over 20% drop, and another one in April, an over 20% drop. And that really, just took the bottom out of Netflix. Now you're back up to that previous double bottom and that gap, right? So you're filling the gap from that earnings gap from April of 2022, and you got this previous double bottom. This is a big level of resistance for Netflix. So, I think that, a little bit of a pullback off this level is not unlikely. But then that little pullback just allows for a reset. And I do think that you can see Netflix continue higher. I like Netflix. I like Netflix for the long term. I own it. I sold out of, the bulk of it in 2021. Thank God that I did, but I did not add back to it. And that I'm kind of bummed about. So, I sold out of Netflix like I did in the rest of my long-term portfolio right here in 2021. But I did not add back to it down here. Kind of bummed that I didn't. But I do still own some of it. And eventually I think I will be adding back to it. I do think that I like Netflix for the long term. I do. Do they get back to 700? Probably not for a very long time. But I think that stock has room to 400, but I think you get a pullback first off of this resistance. Hope that helps answer your question, Jay Fippy. Fipsy. Do you think some of the small cap rallies are actually funds buying into growth? Heard a couple analysts talk about growth undervalued, not speaking about memes. Okay. When you say small caps, when you said I'm not speaking about memes, I assume you're talking about the Russell. If you're talking about real small caps, because on it, like active traders, when an active trader says small cap, they're actually talking about micro caps. If you want to be technical, like these like $3 stocks that like pop up out of a press release, they're micro caps technically, right? So real small caps are the Russell. And I absolutely do think that over the last couple of days, you've seen the Russell perform very well because you are getting some funds that are coming back. What has led the market to start the year? It's been tech. The stocks that got crushed the most in 2022 are the ones that are up the most in 2023. Actually, the worst 3 performers in the Dow in 2022 are the top 3 performers so far in 2023. Now, it's only January 12th. But I think that you're seeing the realization from people that, wait a second, the labor market is still holding, earnings haven't cracked yet, and inflation continues to come down. In the chance we avoid a recession, we do not have enough exposure on the growth side of things. Everybody is positioned in consumer staples, in utilities, right? Everyone is positioned from a defensive stance. There are very, very, very few people that are positioned for growth. And that imbalance was exaggerated in December with tax loss selling, because what were the stocks that got hit the most? It was all the growth stocks. They all got sold off even harder in December for tax loss harvesting. And now that selling pressure has eased and people are looking around saying, wow, inflation really looks good. Wow, the jobs numbers really look good. We better put a little bit more growth on because we're not exposed enough. And that is absolutely what's taking place, Gold Miner, that funds are buying small caps, specifically in the Russell, to get exposure to that growth because they are too defensively positioned. You are 100% correct. Excellent thought process and analysis. What do you think of life insurance companies for the long term, like JXN, Jackson Financial? I don't know enough about JXN as a company individually. I'll tell you right now from first glance, it's a nice looking chart. You know, you had a strong double bottom at the IPO low during the market crash there in 2022. Now you come back up and stabilize. You have a monstrosity of a resistance zone. I mean, this is a very wide zone of resistance for a stock that's only $36. And I'll draw the zone for you. And when I say zone, because it's not one particular price, it's really an entire area. And this area is a few dollars wide. You guys can see it right here, right? It's very, very clear and obvious. You can see all of this was support. Then you start getting into this zone, and this zone starts to become resistance, right? So you would look for this JXN. If JXN, without me knowing really much about the company's fundamentals, just looking at the chart, if this thing clears $38, $39, then this thing probably has a one-way ticket to 45, 46. So I like the chart there. But again, I don't know anything really about the company itself, but life insurance companies as a whole, I do like for the long term. Nice little defensive plays. With the possibility of a bunch of new gig workers because of a recession, do you think any of these companies will get a bump? I actually really like Uber. Uber is the one I like the best, money trades. I think Uber is the best one in the gig economy. I like Uber. I like what Uber's doing. They are the clear leader. They are far better than Lyft. They have they've been successful in their food delivery, the alcohol delivery, not just the ride sharing. So I like Uber. Uber's my pick in the gig economy space, but you also have to realize if you go into a recession, it's not like Uber just endlessly hires drivers. You're not going to get like this huge surge of hiring in Uber. So you'll also get, you'll also probably get cuts in those companies as well. So, but with that being said, I actually like Uber, and I think Uber could have a pretty good year, and I like Uber for the long term. So Uber is definitely something that I think can have a very nice place in the long-term portfolio. Thoughts on UPS affecting the market if their union goes on strike? I don't think it's going to affect the market. I don't think it's going to. I think like on the list of things that the market cares about, I'd say that's near the bottom. I don't see that being a major catalyst. I think the market is way more focused on, the jobs market and earnings, and that's going to dictate the market movement. The other catalyst that the market would care about would be if China goes back into COVID lockdown, if the Russia-Ukraine war was to escalate to another region, if tensions between China and Taiwan escalated, if there was some crazy new variant that caused lockdowns again in other countries, like those are the catalysts the market would care about. UPS union going on strike, I don't really necessarily think that the market's going to care too much about that. Keep firing away, folks. I'll take, it's 6:45. We've been live now for about an hour and 30 minutes. I'll take maybe one or two more questions, guys, and then we'll wrap things up for today. Do you think this is a balance in the overall market or the beginning of the end of the bear market? Oof, Ryan, great question. I think it's just a bounce in the market. I don't think the bear market's over. I do believe we will have a mild recession at some point. I do not believe that we are going to get out of this without a recession. Now, I've been very vocal about this for the last several months, that I believe that we will see a recession, just a mild one. I've never been in the camp of the world is ending, Great Depression, market's going to go down 80%, everyone's going to go and stand on, bread lines and soup kitchens. I was never in that camp. Even when the markets were crashing in September and October, I stayed firm that that's not the case that I see happening. I could be wrong, but I'm also not in the camp that says that we're going to have a soft landing. And I'm just going off of history. The Fed's, the success rate of the Fed going through a rate hike cycle and pulling off a soft landing is around 20%. 20%. That's how successful the Fed has been in history, going through rate hike cycles and achieving a soft landing. Now, they did achieve this in the mid-90s. In the mid-90s, they did achieve a soft landing. It was like 94, 95 rate hike cycle. They did achieve a soft landing. But when you look at every recession that we've ever had in history, every recession has been preceded by one of the following. Either a rate hike cycle caused a recession, an inverted yield curve, or an oil price shock, meaning the price of oil shot higher out of nowhere very quickly, and it just shocked the hell out of consumers, and it really hurt everybody's spending power. Every recession in history was preceded by one of those three events. In 2022, all three of them happened. Rate hike cycle, which also happens to be the fastest rate hike, most aggressive rate hike cycle in history. An oil price shock, oil went to $120 a barrel. And you have a very deeply inverted yield curve from short-term to long-term. So you have a fully inverted yield curve. At every point of the curve, it's inverted. You had an oil price shock, and you have the fastest, most aggressive rate hike cycle in history. History tells you that is a surefire recipe for a recession. However, I always think it's important to talk about both sides of the argument. Now, I already told you I believe we have a mild recession. The people that say we're not going to have a recession, one of the arguments that they make, and it's a valid one, it does not deserve to just be poo-pooed and thrown under the rug. Very smart people are also, analyst from Goldman Sachs doesn't think we're going to have a recession. Jim Liebenthal doesn't think we're going to have a recession. Tom Lee doesn't think we're going to have a recession. Bill Belsky doesn't think we're going to have a recession. Ed Yardeni doesn't think that we're going to have a recession. Jeremy Siegel doesn't think that we're going to have a recession. These are very, very, very smart people. Does it mean that they're stupid if we do have a recession? No, they have their reasons. They have their thoughts. I have mine. Does it mean that I'm stupid if we don't have a recession? No, I have my reasons. They have theirs. But one of the things that they say is, well, yeah, you've never had those things happen and there not been a recession, but you've also never had trillions of dollars get dropped into an economy from both the Federal Reserve and the government. That's also never happened before. So this entire scenario of COVID and then the post-COVID era, the post-COVID recovery, is going to be wrote about in economic books for decades to come. Your great-great-grandchildren are going to learn in college about the COVID era because things have happened that have never been done before. So the impact of all of these things on the economy is really unknown. You don't have anything to look back upon and say, well, when this happened, this happened. You don't have that. There is no cause and effect to look back upon. So I hear that argument. I get it. Makes sense if you want to make that stance, but I believe that we will have the recession. I just believe it'll be mild, and I believe it'll be short-lived. So I don't think that the bear market is over yet. You see, because the stock market bottoms during a recession. Stock markets don't bottom before recessions. They don't bottom after recessions. So the only way that the bear market's over is if we end up not having a recession. If we don't have a recession, then yes, that October low is your low and the bear market will be over this year. That's if you don't have a recession. But if you think we will, then the low of the year, then the low is not in, because the stock market won't bottom until you're actually in a recession. All right, I'll take one more question, guys, and then we'll wrap it up. I'm going to get some dinner. What are we at with the Fed selling? How do we watch that? It's on auto. It's on auto drive. They're at around 90 billion, 90 billion a month. They're going to be ratcheting that up. You'll get an update on. You'll get an update from the Fed on their February 1st meeting. So they're doing 90 billion a month. Their goal is to get $1 trillion off their balance sheet in 2023. That is their goal. And it's on autopilot. They're just letting the treasuries mature and just fall off their balance sheet. They really have not been aggressively selling mortgage-backed securities, though. So the mortgage-backed securities, they're going to have to sell those. But these other assets like the treasuries, they can just let them mature and let them just fall off their balance sheet and not reinvest in it. And that's how they can shrink the size of their balance sheet that way, which is what they've been doing. But once they start ratcheting up the sale of mortgage-backed securities, then you're going to really start to see some liquidity get taken out of the market when they start doing that. And if you go into a recession, they're going to have to stop that. They're going to have to stop doing that. They're not going to be able to continue to drop 90 billion off their balance sheet every month if you do go into a recession. So that will come to a pause if a recession does appear. All right. So there you have it, folks. That wraps it up. That does it for me today. I hope you guys enjoyed this Q&A session. It's been one hell of a week, man. It's been one hell of a week. It really has. It's been one hell of a week. Again, if you guys want to join the trial membership, you can go to ttgthree.com. Join our trial. It's 7 trading days. It's only $3. We charge $3 just to make sure you're a real person. It's a one-time payment. There's no auto renew. There's no automatic upgrade. It's just a one-time payment of $3. You guys want to trade through this earnings session here in this earnings season with us? Join the trial. Go to ttg3.com and you'll have a chance tomorrow. If you join the trial today, you have a chance tomorrow at winning a free annual membership to your trading group. So good luck. Join the trial. Go to ttg3.com. And I'll see you guys all in chat tomorrow morning. I'll be live tomorrow at 3 p.m. to trade with you for the final hour of the day. Don't forget the markets close Monday for Martin Luther King, and we'll be back to work on Tuesday. Thanks for joining me tonight, guys. I love you all. Subscribe to the channel, smash that like button, turn on your notifications. I'll see you all in chat tomorrow.